Health insurance provides coverage not just for you, but for your spouse and your dependents as well. So what do you need to know to make the best possible decision for health insurance for your family? Hi there, my name is Sarah and I'm here with iHealthBrokers. Now if you have any questions whatsoever about your health insurance regarding this video or really any other topic related to health insurance, please feel free to send us a message in the comments, and you can always call us at iHealthBrokers at 888-410-0344. We are licensed nationwide in all 50 states, and there's absolutely no charge for our services. So if you need any help whatsoever, please feel free to reach out. Also, as a reminder, please make sure to subscribe because we do release these videos on a weekly basis, not just with health insurance tips, but with also money-saving tips related to health insurance, as well as healthcare updates. So make sure to subscribe. And of course, please like this video as well. Liking it will make it more visible to others looking for the same type of information. And if you're so inclined, you can find us not only on YouTube, but on Facebook, TikTok, Instagram, and Twitter at iHealthBrokers. If you're working full-time for a company with at least 50 full-time employees, then your company must offer you health insurance, and this must be extended to your spouse or any dependents that you may have. This insurance must be deemed affordable. In 2022, it can exceed 9.61% of your income. If this is not the case, then it would be deemed unaffordable, in which case you might be eligible for a premium tax credit through marketplace plans. Unfortunately, there is one problem here, which is that the Affordable Care Act doesn't take into consideration the cost of family plans. This is the family glitch, but there are some hopes that they may be remedying that in the near future. Under the Affordable Care Act, you'll be able to keep your dependents on your health insurance until they are 26. Should you leave your job for any reason other than gross misconduct, you'll be eligible for COBRA. Under COBRA, you, your dependents, and your spouse will be able to continue your coverage, but you will have to pay the full monthly premium, so it can be rather exorbitant. Now, if you stay with your company until you retire and you switch over to Medicare, then your spouse and your dependents can actually keep their COBRA coverage for a period of up to 36 months if you switch to Medicare. You'll be able to enroll during the annual enrollment, which is dictated by your company, or during a special enrollment period if you qualify. So if there's a change in household size because you get married or divorced, if there's the adoption or birth of a child, this would qualify you for a special enrollment period. During this time or during the annual enrollment period, you'll likely be able to choose between an HMO and a PPO. A PPO will give you more flexibility, but generally speaking, those premiums will be a little bit higher. An HMO will be less expensive, but there will be less flexibility. So take into consideration yours and your family's medical needs. Do you have more extensive medical needs? Do you need to see certain specialists? If that's the case, then you may want to go with a PPO. If you don't get insurance through your employer, then you may want to consider a marketplace plan. Especially look into those premium tax credits. Based on your income, you may be eligible for a premium tax credit, which is reflected in a discounted monthly premium. This can save you quite literally thousands of dollars per year. All marketplace plans must offer the 10 essential benefits, and many of these services are offered with a $0 copay even prior to meeting your deductible. Now, there are many plans to choose from, and you can filter through the plans based on your needs. If there are doctors or hospitals that you know you'll wish to utilize, make sure to check in advance that they will accept your plan. And if you'd like, you can also add vision and dental services if you so choose. Remember, under the Affordable Care Act, you cannot be charged more or denied based on a pre-existing condition. And this applies to marketplace plans and group health insurance through your employer. When you apply for a marketplace plan, if your income is below a certain threshold, healthcare.gov might prompt you to apply for Medicaid or CHIP. Even if your income doesn't qualify you for Medicaid, your children may still be eligible for CHIP, which is the Children's Health Insurance Program. So you'll need to contact Medicaid directly for more information on that. A health insurance agent or broker can't help you with Medicaid. So if this is something you're interested in, contact Medicaid directly. If for whatever reason you are denied Medicaid, that actually will trigger a special enrollment period, and at that point you can reach out to an agent or broker if you need help with a marketplace application. If you don't qualify for a premium tax credit and you're not receiving health insurance through your employer, then marketplace plans can be pretty expensive. If that's the case, you may want to look into a short-term medical plan. Short-term medical plans are a type of private insurance. Now, they're not offered in all states and they're not for all people, but if it does work for you, it is a great way to have comprehensive coverage and save money. They're entirely customizable, and basically you can pick and choose from a list of benefits to make sure that your plan suits your needs. A young, healthy person can find a plan for about $100 per month, so it really is a pretty inexpensive solution to health insurance. However, it is not ideal for people with families or people looking to start families because it won't cover pregnancy. Additionally, short-term medical plans will not cover pre-existing conditions in the first year or possibly not at all. And like I said before, they are not offered in all states, and because there is medical underwriting, you could be charged more or denied. Regardless of what type of plan you choose for you and your family, you should understand the family versus individual deductible and the family versus individual out-of-pocket maximum. It's actually designed to save you money, but it can be a little bit confusing. So your deductible is the amount that you pay out of pocket before your insurance begins to contribute to the cost share. There are, of course, services that are covered prior to meeting the deductible, like wellness checkups and some of your more basic preventative services, but there are other services, perhaps like hospital stays, that you would need to meet your deductible first. In this case, we're looking at an individual deductible versus a family deductible. So let's say in your plan the individual deductible is $1,500, $1,500, and the family deductible is $3,000. Well, if you've already met your individual deductible, if you have paid $1,500 towards your deductible, then your insurance will begin to contribute to the cost share. However, this wouldn't apply for the rest of your family. This is where the family deductible comes in. Let's say you've paid $1,000 towards your deductible, and your spouse has paid $1,000 towards their deductible, and one of your dependents has paid $1,000 towards their deductible. Well, none of you have met your individual $1,500 deductibles, but together you have met the $3,000 family deductible. So since you've met the family deductible, now your insurance would begin to contribute to the cost share for all members covered under the plan. So even if you had an additional dependent who hadn't paid anything towards their deductible, it would be considered that their deductible had been met, so their insurance would begin to contribute to the cost share, so you'd all be responsible for co-pays and co-insurance at this point. And of course, the same applies to the out-of-pocket maximum. The out-of-pocket maximum is basically the financial threshold, the cap of yearly medical spending. So if you meet your out-of-pocket maximum, then your insurance carrier will take over for the remainder of the medical bills. If you have any questions whatsoever about deductibles or your insurance in general, please feel free to send us a message in the comments, and you can always give us a call at iHealthBrokers at 888-410-0344. And please don't forget to like this video and subscribe as well to stay up to date. Thank you so much. Have a wonderful day. Bye-bye.